Hello everyone, my name is Manolis Sfinarolakis, the founder and producer of RealityCrowdTV, and welcome to Patch of Land Real Estate Crowdfunding 101. Today we're co-hosting an amazing show with patchofland.com, a real estate crowdfunding platform, and I would love to introduce to you all the Chief Marketing Officer of Patch of Land, AdaPia. And AdaPia, thank you so much for joining us.
Hi Manolis, thanks for having me, and thank you everyone who's watching or listening. I'm really excited about this first webinar that we're doing, and we plan on making this at least a monthly event, maybe bi-monthly as demand goes up. So thanks everyone for joining.
Excellent. And AdaPia, I'd love to give you the opportunity to explain what Patch of Land is before we get into the bulk of our educational materials. But would you like me to actually play the 2-minute explainer video first, and then you could kind of tell us a little bit more about Patch of Land afterwards?
Yeah, sure. The explainer video would be really great. I think everybody will really enjoy it.
Great. Okay, I will share the screen here, and we'll play the explainer video.
Investing in real estate can often feel like a VIP club, where only a few are allowed entrance. Those in the know find the best deals and make back a huge ROI on their investments. It's no secret that real estate investment is one of the best ways to create passive income that really works, but only if you have real insider info. Plus, you often need to have a huge amount of capital to really get in on a good deal. Patch of Land is doing things differently. We're opening the doors to all accredited investors interested in real estate investment and pooling our money and resources to fund the best development deals. With a low minimum commitment, this means a lowered risk for our investors because you can diversify into multiple deals. We've taken all the hard work out of real estate investing and automated the process. So even an accredited investor with relatively limited knowledge of real estate investment can use our service. It's as simple as looking through our portfolio of projects and finding the one that fits your needs, then signing the documents online. Our team of real estate professionals with 20+ years of experience goes to work for you, vetting developers and doing the work of due diligence and deal analysis. We believe in trust and transparency, so we put that documentation at your fingertips so you can review the deal terms, the project, the local market, and the developer. Our due diligence is yours to review anytime, so you can feel confident, as we do, that all the projects have been carefully curated and are the cream of the crop. With Patch of Land, you connect with hundreds of developers seeking capital for their projects. We're so confident in our project portfolio that we underwrite and co-invest in these deals to get you the best rates. Patch of Land issues short-term, high-interest rate loans to real estate developers secured by the underlying real estate asset and pass those rates on to you, with rates that are better than banks, bonds, and even equity markets in some circumstances. Watch your money grow 24/7 through our online dashboard. We keep everything transparent so you can see important data related to your investment. It takes as little as 10 minutes to start investing with us. Sign up today with Patch of Land and get in the know in real estate investment.
Great. That was an excellent video. It really gives a very good summary of what Patch of Land does. But I'd like you, in your own words as well, to kind of give us an introduction to Patch of Land.
Sure. Well, it's interesting because we did that video back in, I want to say, April. So that was a little while ago, and it's interesting because in startup world, the company changes.
To modernize
you know, the company changes basically on a weekly basis, and you know that's just how it is for startups. But the essence of that video has absolutely stayed the same. We're you know, we are sorry, there's somebody joining the call. It was throwing me off. So the business is the same. I mean, we're really here to provide a different way of financing real estate, and that video was very centered towards investors because what we're doing really is providing investors a new source of investments that are secured by real estate, that they may not have otherwise had access to. And we're very big on transparency. We're very big on technology. We're working on the back end to build scalable systems that will allow us to underwrite thousands of loans. You know, the name of the game is to be able to do this nationally, across every state and for all kinds of borrowers eventually across the spectrum of real estate financing. So for the borrowers, and that's been a really, that's been a really big focus for us as well. You know, there are so many people doing great work in communities, rehabilitating homes, and even commercial rehab. There's a lot of those as well, and there's so many properties across the country that need financing to be improved upon, and that's really the goal here, is to provide borrowers with a better source of financing, a more consistent source of financing, and a better overall experience. They don't have to go to a broker. They don't have to go looking for money. They can just come to the website, do it quickly, upload the documents. We have the technology on the back end to help us underwrite quickly, and they can go do their thing and just come back for more. So that's really like the two sides of this marketplace, and then we match the borrower to the investor to provide that financing.
Wonderful. And real estate crowdfunding, what you guys are doing is you're taking the traditional finance model of real estate and putting it online, and you're providing that efficient marketplace. So I know you may have you had prepared a slide presentation that might kind of give the audience exactly what real estate crowdfunding is. So would you like to go ahead and go through that presentation?
Sure. Yeah, I've got a crowdfunding presentation. So we can just go through this, and okay. So let me just go into this. Okay.
Wonderful. I see it. It looks great.
It does. Okay, perfect. So now I get to get back for me. All right, so this, you already know who I am. So super basic. I mean, obviously we know that the internet is transforming every industry. Uber, Airbnb, WhatsApp, Square, Lending Club, the airline industry, and like the travel industry, right? You used to go to a travel agency to book your flights or to book your vacations, and now you absolutely don't need to do that anymore. You just go direct to the source, and that's what this is. That's what getting financing is going to be. You don't need to go looking anywhere other than, let's say, our site, or there are several other sites out there, but essentially this is what this is about. And it's the e-commerce model that we're talking about, so ease, efficiency, access, and transparency. So if we just go back into what crowdfunding is to begin with, it's an approach to raising capital for new projects and businesses, soliciting contributions online from a large number of unrelated individual stakeholders. So we've first seen crowdfunding in the guise of Kickstarter and Indiegogo, so rewards and donations-based platforms where you could donate to somebody's project, and this all started for film. Or books. You could crowdfund if you were an author or a filmmaker independently, a musician especially. You could crowdfund and sell copies of your album, T-shirts, signed posters. I mean, all kinds of things. And you would get funding to do this. It was a way of also making pre-sales and proving a product. So that's how it all started. And then you take it forward, and then people started to launch technology projects on Kickstarter, which got millions of dollars of funding. Independent films, entire albums, video games have been hugely successful on Kickstarter and Indiegogo. So in the U.S., we had Congress looking at this phenomenon and the millions and millions of dollars that were being raised on these platforms. And they've applied the same tenets to investing. So while crowdfunding may be more appropriate a term for Kickstarter and Indiegogo, what we're doing, what investment crowdfunding is maybe more crowd finance or crowd investing. That would be the more appropriate term, even though this is still bringing a lot of people together to make an investment into something else and getting returns from it. So when Rule 506C was announced under Title II of the Jobs Act, Rule 506C, this was in September, I believe September 13th or 23rd of last year. What it did is it lifted the ban on general solicitation. So for the past 80 years, a private issuer, so somebody seeking funding that wasn't a public company, needed to only, basically, they couldn't advertise. They had to do everything privately. They couldn't, they couldn't shout it from the rooftops. They couldn't really make a presentation. There had to be intermediaries that, like broker dealers, that would bring them clients, and they would do presentations to. So what happened when the general solicitation ban was lifted was it opened it up all of a sudden to, hey, you can advertise your individual deal. And with the advent of social media being such a huge medium of communication, that also meant you could tweet your deal and you could tell details about your deal. And that's been a massive change, just massive, because now companies don't need to rely on third parties. They don't need to rely on intermediaries to raise capital for them, and they certainly aren't limited to the number of people they can reach. So it does becomes a marketing issue very much. So this, for the past year, there have been a lot of industries that have taken advantage of this. Real estate has really been one of the strongest growing, and one of the reasons for this is people really understand real estate. It's tangible. It's what wealth has been built on for centuries and will always be built on, and everybody understands it, and everybody knows that it's a good way to build wealth. So what we're looking at right now on this chart is a CrowdWatch report. CrowdWatch is from Crowdnetic. It's one of the leading companies that tracks private issuers that are publicly raising in the overall space. So what we're seeing is real estate development and real estate investments, which there's a slight distinction to these. These are amongst the top. Now, what's really interesting is that oil and gas really bumped up in Q3 because in Q1 it was real estate just by far, and then some people started publicly raising for oil and gas. And of course, when you're raising for an oil and gas production and pipeline, you're looking for a lot of money. So it bumped right up in terms of the dollar amounts. And you can get this report online if you go to crowdnetic.com, and I would highly encourage everybody to do that if you really want to see what the numbers are like. But you can see, obviously e-commerce is huge, there's a ton of that, but you've got more and more people looking to raise money publicly through Title II online now. And of course, this is what we do. We raise money for the borrowers that come to us. So the borrower would be the sponsor, but the platform, in this case, Patch of Land, for example, does all the work to raise the capital, so that you're a borrower, you're a developer, you're doing your flips, your refis, you just go and do that, and we take care of everything else. So that's what, that's the other thing that makes it easier. It's really an easier way to raise capital, and that's what this is all about.
Hey, AdaPia?
Yeah.
Yeah, a quick question, actually. This is a follow-up
Sure.
question. You can keep the presentation up, actually.
Yeah.
In regards to Title II, because I just want to make sure the audience is aware that Title II is equity crowdfunding, and that's one of the that's the questions we have too. Is who is able to participate currently in crowdfunding, specifically under Title II?
Sure. Yeah, sorry. I got carried away, got really excited about real estate. So Title II is, unfortunately, for now, only for accredited investors. So that means that you are an individual that for the past 2 years and for this year reasonably expects to make $200,000 or more in income. If you have a spouse, then that's $300,000 combined, or you have $1 million of net worth, excluding your primary residence, but including its mortgage, which is kind of silly, but that's the way it is. So there are 8 million U.S. households that are accredited. There are I don't even know, tens of millions that are not. So really what everybody's waiting for is Title III, but really it's Title IV. Well, we can talk about that a little later too, but Title III is not going to help, at least our industry and many others. And yeah, it is for equity crowdfunding, but it works for debt as well, because so long as we're issuing fractionalized notes, they're securities. And in that sense, they can only be sold to accredited investors. But we're all waiting with bated breath for Title IV, which would open up to retail investors.
Wonderful. Thank you for that.
Yeah, you got it. So then what we'll move into really quick is, this is the problem that we're trying to solve with real estate crowdfunding and Patch of Land being a debt-only platform. So we don't underwrite any equity real estate. We only underwrite debt. So there's just a huge disconnection. This slide explains, we've got real estate in the middle. We know it's valuable. We know there's inherent wealth-building ability in real estate. You've got investors on the one side who want to be able to access other kinds of real estate aside from just buying a primary residence and putting a mortgage on it. They have money to invest. They want a better rate of return than they're currently getting. They want less volatility than what's in the stock markets currently, or even the bond markets, which aren't returning that well. And they don't know, there's that question mark, they don't know how to get into real estate in any other way. They might be able to buy a REIT, but a REIT, whether it's publicly or privately traded, they have no control over what's in that investment vehicle, right? It's left to the managers. The managers take 20%, all the rest of it. So they're going to get some kind of return, but they're not going to have a direct interest in real estate. On the other side of the real estate coin, we have our borrowers, who are these professional, they're called professional borrowers. We call them this. They are people who are in the real estate industry. They are doing fixes and flips. They're doing rehabilitations. They are doing refinances and bridge. So they have access to real estate assets that they can turn around for a profit, and they need money in order to buy it, fix it up, and then turn it over. So these people might not necessarily have access to big lines of credit. Like, they don't have a bank that they can just go to like the big developers and just get tens of millions of dollars to do this kind of work. And they don't have the time to go raise money, and they might not have the right kind of connections. The banks are not lending to short-term real estate borrowers like this. The banks are lending on traditional mortgages, and the options they have are like hard money lenders, and rates can either be really high, or they're not sure they can get money from that particular local hard money lender. It's not always the case that there will be capital to be given to these people. So what we have is this disconnection. So how do we get an investor directly to a borrower investing in an underlying asset? And so this is what's going on here. So the connection, we call it P2RE, so peer to real estate financing. Maybe you've heard of P2P, so peer-to-peer, Lending Club, Prosper. It's like that, except we have an underlying asset that's securing the note between the investor and the borrower. So Patch of Land comes in as a platform to match investors to borrowers and to list the deals that that we actually underwrite, and I'll get into that a little bit later. So this is how we're connecting investors directly to borrowers, and what this does is just opens up all this capital. You don't have to wait for the lender, your traditional lender, to come up with some money and have all kinds of restrictions on that money, especially if they're funded. You just go directly to this investor through a platform. And this is what real estate debt crowdfunding is, essentially. So I'm waiting for my slide to move. It's not moving. Is it still stuck on the connection for you?
Yeah, I actually see it. It's still stuck on the connection P2RE Financing. But I did have another question. Actually, I wanted to also encourage the audience. Right now, we also have the question and answer application, so you could ask any questions throughout the webinar in case you did have anything you'd like to ask. The application is up and running, and you could just submit your question on Google and we'll make sure that we answer it by the end of the show. So one thing as well, the problem that you guys are solving is by leveraging the technology that you guys have proprietarily created. And I know that you recently have gone to an event to show off a lot of your new technology. I'm sure when we do the demo you might be able to talk there. But what is the problem that you're noticing specifically with a lot of the platforms? I know that right now, because the deals are highly curated, you have to use underwriters and professionals to go through and do all the due diligence immediately. But I know you guys are working on your technology to make that more efficient as well. So perhaps you'd like to share a little bit about that as well?
Sure. So we're currently using a mix of technology and human underwriting. And let me just premise all this by saying that there will always be human oversight and a level of human underwriting on what we're doing. Always. You can't replace, whether it's boots on the ground experience, the professionals that we work with in the various cities and areas and neighborhoods that we work in, to the people who have dozens of years of underwriting experience here. What we're doing on the technology side is we're building a scalable modular system, and what this means is that whereas we're underwriting anywhere between 6 and 10 loans a month right now, we're going to be able to underwrite thousands, and we're going to be able to do that because the technology will allow everything to be sped up, and there will be less time chasing down documents, less time doing a lot of manual underwriting. And currently it means that origination speaks to underwriting, speaks to the website, speaks to marketing assets. So when we list a loan online, all the information is there. There's also technology that matches algorithmically investors to borrowers. And the underwriting technology itself uses a combination of several sources of data that give us insights into especially the property and the market that the property is sitting in, so that we understand using a lot of data what that property is worth, what the rehab value should be, how much should be put into it, price per square foot, and also trending data that hopefully will allow us also to understand which markets are saturated, which markets have the most amount of potential to go into going forward. So really, we're just really compressing underwriting time from currently some lenders take weeks. I mean, we currently take about 7 days at the most if we have all the documents. So it's compressing that down to a matter of hours and eventually even minutes.
Wow, that is impressive, and I'm interested to see how the platform progresses. Your presentation, is that back up and running? Yeah,
I've got it now, and hopefully it actually moves with the cursors as I press the buttons. So if you can see it, the slide says Crowdfunding Reach, and basically this is it. I mean, if you're a borrower, if you're a developer, you're the sponsor. You know that you can reach your first circle, friends and family, people that you know, acquaintances, and then if you want to reach out, you go to your brokers and you go to a larger network. Well, what crowdfunding does absolutely eclipses this, because it has the potential just to reach so many more people. And even without going into the whole retail investors yet, still the ability to reach multiple millions of people that are accredited, and then including institutional investors that work with platforms like Patch of Land. It just means that we just do all of that for you. You're being marketed, you're being branded, you're being networked to thousands of people that you wouldn't have access to otherwise. So here we go. So this is just a quick slide on who our borrowers are. If I've got some borrowers in the audience and you need some financing, please go to our website and sign up and send us some of your financing requests. We work with professional real estate borrowers, so long track records, a lot of experience. You know, maybe they're doing 5 to 10 properties a year and they want to double up. Maybe you know, they want to get into like other areas. We work with these professionals, and usually they're operating a company. We don't lend to just an individual who has an idea that wants to do this. And a lot of times they're either attorneys, builders, developers, contractors, people that are very familiar with real estate, because we rely on them to be able to do what they say they're going to do. And they're in constant need for capital, like we talked about, and this really covers just thousands of people across the country. And then we match them with our investors that are accredited, the 8 million U.S. households. They're very high net worth. A lot of these people don't have access to private real estate deals, and they're looking for them, and that's why they come to crowdfunding. And then financial professionals, and this ranges from anything from a wealth manager to a family office, all the way up to large hedge funds, private equity, and capital companies. And of course, there's a ton of money that is looking for good investment opportunities. So this is really kind of like a match made in heaven, if you will. And this is the opportunity. So again, we've got unfundable banks and old school, low tech, really disjointed lenders sort of everywhere. I mean, you can have friends and family lending to you. You can have sort of professional hard money lenders. You can have sometimes some smaller hedge funds will get into it. But really, there's no consistency. You don't know how they're underwriting. You don't know anything about what they're doing or how they're doing it, and that's a big problem. We want to create more transparency, and that's what crowdfunding is all about. If you think about even on like a rewards-based site like Kickstarter, you're a public profile, and so there's a lot of accountability there, and it's great for you if you're looking to get out there and do more business. But there's also a lot more accountability. You can't just walk away, and also for the lender, it's good for you if you're a borrower, especially if you're an investor, to know a lot about who this company is that you're working with, so what their track record is, and who the management team is. And you know, we're looking overall at a $2 trillion market in general of private lending, and it's hard to quantify, but that's an estimated number from the Federal Reserve and some other sources like Seeking Alpha. And this is just really quickly, this is how it's done. This is how we do it. This is our form of crowdfunding. I can't speak to other crowdfunding portals, but we source the loans. You sign up with a developer account. We collect all the information. We do our due diligence. We approve it, and it goes live. Then we do the funding part, which is usually a patch of land will either pre-fund or we commit to pre-funding a loan. So that means that we put our own money in the loan first, so that the borrower can get going, and then we syndicate the loan back out to the crowd. We manage the campaign, and everything on the back end. We manage all the interaction with the investors, and we have a no prepayment penalty clause, and so we just repeat, we do it again, and then we also service the loan. We work with a third-party national servicer, which means that we also have a bankruptcy remote entity for those who are concerned about security and safety of a platform and their money. It's separate from Patch of Land, the operating entity. And we do all the distribution and management of funds. We make monthly payments, interest payments, all the legal and tax documents, whether those are 1099s, and all the information and regulatory and compliance especially. We take care of all of that. And this is just a really quick circular, how it works with the process flow for borrowers and investors. And Patch of Land acts as this platform in the middle where we do the underwriting and we do all the work that really stands that project up, so that a borrower can come in and get their financing, and an investor can see that project and decide to invest in the project. And this is overall, obviously I'm going to use Patch of Land as an example, but overall this is what crowdfunding is about, right? It's about matching a good quality project. In this case, it's backed by real estate with money that wants to invest in real estate. I'm just going to skip this slide, and we can talk about what we touched on earlier about retail crowdfunding. And I know, Manolis, you're really you're a huge proponent of this. You're always asking everyone, like, when is it coming? When is it coming? Regulation A+. So I don't know if maybe you want to talk actually like what you've been hearing about that. I know that there's a lot of talk about it, but on the slide you can see that currently we have these 8 million households. We've got some family offices that are investing, so you can see that the pool of investors is getting bigger, and then institutions, obviously, tens if not hundreds of millions of dollars. But what's even bigger is going to be when the non-accredited, which are 115 million households, can also invest in these loans.
Absolutely, and they, the two provisions, as you mentioned, is the Regulation A, which is really the one a lot of people are excited for, and then you also have the Title III, which, depending on how the SEC will end up with their rulemaking, could be the first version of the unaccredited investing to come out. But just like you, I think everybody's really just waiting for the Securities and Exchange Commission to release the rules at this point. So unfortunately, nothing new to report on when that can happen, but hopefully soon enough.
Yeah. I guess we'll be finding out. I know the SEC just clarified interstate crowdfunding and how they're tracking that. So for those who don't know, there are ways of getting around the Jobs Act, essentially, and that is by doing intrastate. So there are 13 states that have their own rules for crowdfunding, and those rules will allow everyone, absolutely everyone, to be able to invest minimum amounts if the platform or the sponsor wants that. And the problem with that is that it can only be in that state. So you can't raise money across the nation, but you can raise money in your state. And honestly, that's also a great thing. That really gets your community involved, and you can reach more people, even though you're sort of restricted to that state. And what they've done is they've decided that they're doing it by IP address, and that's how they're gonna know whether somebody investing is from that state, because it's going to be where the IP address of that computer comes from. So the internet is throwing everybody for they have to consider that. That's been the newest thing that's come out about intrastate.
That's amazing. I didn't hear about that. So that opens the door for easy tracking of this. So I think the state within the state crowdfunding, as you mentioned, now that they have that tracking mechanism, that's going to really, like you said, help a lot of communities and fund a lot of real estate deals, because obviously there's 8 million accredited investors, but the real opportunity is getting everyone, regardless of income, to be investing in real estate shortly. So thanks for educating the audience. That's great.
No, you got it. Yeah, and we want everyone to be able to make a good return, not just people that are, maybe tendentially already making good returns. Hard to say, right? It depends how well their money is managed, if at all. But we want this to be for everybody. We want everybody to be able to participate and, create wealth and create access to money for people who really need it. So just a couple more slides here on why crowdfunding is a game changer for real estate. If I haven't already, yapped everyone's ear off about it. It's a huge opportunity. The problem with real estate investing is the lack of connecting capital to people who need it. Crowdfunding helps solve this problem by creating that connection through portals that are doing a lot of work. All of us in the industry are working really hard to make crowdfunding a viable alternative to real estate financing. The advantages of crowdfunding are ease, transparency, access. We do a lot of marketing for you. We connect you to investors. There's just so much easier. It's just, I think ease is probably the key word here, and that's a big advantage of crowdfunding on both sides of the equation. If you're an investor, for example, for either you're a direct lender and you know how to do that, you're well versed in it, or you wouldn't otherwise know how to do this and feel safe about it, feel secure that this is a good investment that you're making. There are some risks in crowdfunding. I mean, people talk a lot about fraud, and that's something that's scaring a lot of people, especially the SEC is really worried about opening this up to retail investors for fear that they'll get defrauded. And the thing is that when we're doing our own underwriting, we are working really, really hard on the due diligence to make sure that fraud does not occur. And the more technology that we bring to bear in this industry, the less there will be a chance of fraud. I really do believe that. And not so much technology that everything's an algorithm, right? And this is why we're going to keep human underwriting. We're not going to have a potato salad here like Kickstarter had. That was algorithmic. No human oversight. We will always have human oversight. It's necessary. So there's that's one of the biggest risks. And I would also say a risk overall for the industry itself is that we might get a company who pops up on the internet and says, "Hey, I'm crowdfunding," and they're not. So that's an actual risk. That's a huge fear for the legitimate platforms in the space, is that we're going to, you hear that there's all these portals popping up left, right, and center, and I would say do your due diligence on the portal, whether you're on the sponsor side, the borrower side, or whether you're on the investor side. Make sure you're sure 100% about who's running it. Call them. Make sure you're talking to management. Look at their track record. It's really important for everyone. So that would be one of the bigger risks that I see. And if you're an operator and you want to work with a crowdfunding platform, so you have to look at whether you need money as a loan, or whether you're looking to partner with a crowdfunding platform to raise equity. So are you looking for just somebody that is going to lend you the money, you pay an interest rate, or are you looking for like joint venture partners? And the types of, which goes to the types of financing, if you want debt or do you want equity. What I was talking about before, know your portal. Do a lot of due diligence on the portal, even as a borrower. Make sure they're not throwing in junk fees and all kinds of other fees that you'll find them in the term sheet. Really look hard for those. It's really important because there should be less fees as we go forward, right? If we're bringing all this technology to bear and we're removing friction and we're removing overhead, the need for overhead, there should be less fees. You need to have documentation. Just because this is online and easy doesn't mean it's lax. So you're always going to need a PPM, a project package. The more information you can give, the better for the due diligence part of things. So having all your ducks in a row, all your documents in a row, the same way you might go to a bank and ask for financing. The platforms, at least the really credible leading platforms in the space, are probably more stringent underwriters than anyone else. We're very risk averse, and but we're very fair. So we do a lot of due diligence. So the more, the better. And then the last one is this public profile. So the wisdom of the crowd, and that means crowdsourcing. People are smart. People are sophisticated. They're going to go look you up. They're going to want to know your track record. They're going to want to believe in you as an operator, and that's really important. And I think it's a great thing to have that added accountability and responsibility. And let me tell you, the investors that we work with, they love to see success, not just because they're getting interest and money, but they like to see when a loan is paid off. They like to see updates on the properties. You know, they get really into it because they're also doing a good thing. They're helping communities get rebuilt, and it's a little, maybe little talked about social component to what we do, but it's very strong in a world that's getting more and more socially aware and community driven. And you know, I kind of talked about this already. What should you look for in a crowdfunding platform? Track record, compliance, who's the leadership team, what kind of technology are they using? Make sure they know how to use it and it's not just a fancy website, because that's not technology. Stringent underwriting standards, and whether, and I say curation versus Craigslist, is it a curated platform or is it a platform where they'll just let anybody list a project? Please don't work with that. That's not correct. That's no due diligence on there if they're just letting you list, and there's no form of due diligence or vetting taking place. And then this is one of the proverbs and the mottos that we live by, which is, if you want to go quickly, go alone. If you want to go far, go together. And I would say that's exactly what crowdfunding is. So that's my slide presentation.
Absolutely. I really enjoyed going through that, you going through that, because a lot of the questions that we had for the show, I believe, were answered.
Okay.
I mean, really, you hit upon just about every element. The one question I have for you, too, is this.
Mm-hmm.
So Patch of Land, of course, is, the investing side of it. If someone wants to invest in one of the real estate deals you have on the platform, mm-hmm. they have to be accredited, meaning they have to meet that wealth criteria.
Yeah.
But if they're a real estate developer or an operator who has a deal that needs funding, do they still need to be accredited there as well?
No, not at all.
Okay.
Yeah.
Great. Yeah. So good. So in other words, if someone does have a real estate deal and they don't meet that wealth criteria, they can participate, because it's only on the investing side that someone cannot participate. So I just want to make that clear, because a lot of people, when they hear about accredited investing, they might they might think, oh, it's only for for the wealth threshold individual.
Sure. Yeah, that makes sense also, because a lot of the people that we work with on the borrower side are real estate investors. They're called real estate investors. Even when I was getting started, I really had to learn that, and I would get confused between investors and real estate investors. And I work really hard on for me, the way that we like to think about the industry, and it's a personal thing for me as well, is I think there's a negative stigma around flipping, and I think it's really too bad. Because the work that you're doing is so important, and it's a big part of why we do what we do. We're really proud of it. Our motto is building wealth and growing communities, and it's absolutely imperative to us that we help change the perception of these borrowers that are doing such good work, and we really enjoy helping them succeed. And I know that we wanted to. I've got a couple of I've got an example of one of the loans that we most recently closed. If you want, we can talk about that a little bit. Or does anybody else have any questions that I didn't cover yet?
Yeah, you know what? Actually, I think it'd be good to go through that demo. Again, for the audience, we do have around 30 people live on the episode. So if you have any questions, please use the Q&A application, and also use the Google event page to submit any of your questions. But maybe after they see your platform in action, AdaPia, they might have some questions then.
Sure. Happy to. All right, so I'm going to go back into screen share, and all right. So this is a project that we most recently closed. The borrower closed it. This is, when you come in at Patch of Land, this is what you see when you're looking at the projects that we list. So this is how we stand a project up. We have the investment summary, we have documentation, we have some of the useful links. This is appraisal values, etc. So this is you can see, obviously this was fully funded. We talk about the developer here a little bit, the risk profile of the property. This just really helps people understand what they're getting into, because we by no means want our investors or anyone to think that this is risk-free. I mean, there's always risk. So this was the loan, and this was recently this was recently paid off. So this is an email that we sent out to investors and everybody. We like to congratulate our borrowers for doing a great job. And so basically with this project, for example, Mr. Savedo, he purchased it on June 25th. And what's interesting is that this was expected to be about a 6 to 9 month loan. And it ended up only being about 4 months. So he, you can see here, so he bought it for $180,000, put in $40,000 of rehab costs, and that gives us our ARV, which is our after repair value. And when we had underwritten it, we used the 241 as the most conservative of the ARVs, which gives us this after repair value percentage up here. And I just want to come back. I can't remember if it was in here. So we have total costs. So we used this appraisal value of the 241, and he was estimating being able to sell it at 290. And we had some other comps in the area that gave a lot of various numbers on that. And what he actually ended up selling it for was, I believe, 305. So he really killed it. He did really well on this. And we think it's great. We love it. We have no prepayment penalties, so that when he was done, the money, the remaining interest payment and the capital was returned to investors who have actually reinvested in other loans that were open at the time. And we gave some comparative data. So this is just an example of one of the projects, and we have done about 40 loans so far, just over $8 million to date. We launch new loans every Thursday. We're working towards standardizing it on Thursdays. Anyone in real estate knows that it can be sometimes a bit of a race and a lot of chasing to get things to happen smoothly on any given date, especially with closings. But again, this is why as a technology company we're working towards making things a lot more standardized. So expect to see some new loans going up on this Thursday. But this is a case study of one of our borrowers.
Wow, and see, what I really like the most about the platform too, AdaPia, is that there's nothing that's kept behind the curtains. Everything is right in the open, from every single number that you're projecting on the actual website is backed by an appraisal, is backed by all this due diligence, so that nothing is kept behind the curtains. Whereas in traditional real estate financing, you really don't know what the true numbers are.
Yeah.
And so that's why what you guys are doing, you're creating this transparency that has never been around before, because the technology just wasn't up to par. But now you have this amazing website, patchaland.com, and it's happening right in front of investors' eyes.
Yeah, no, thank you. Yeah, it's incredible, and there's some other really strong platforms. A lot of them do equity. There's Fundrise, there's Realty Mogul, Realty Shares, and RealCrowd as well. And a lot of those are mostly equity-based companies, and we're really focused on debt. So I would count those as our peers. We're all working really hard to create a viable industry, and I think all of us, combined and individually as companies, are doing a really good job. So it's just, it's a privilege to be, at the forefront of something so massive, really massive. I mean, I think in a few years we'll still be answering the same questions, but there'll be a lot more people asking them, and I actually look forward to that. So it's been a while, just these past 10 months already. So what the future holds is really up to anyone's best guess. I mean, analytics or not.
No, absolutely, and as you showed in the Crowdnetic graph in your presentation, I mean, real estate's on top. It's one of the hottest industries where where the debt-based financing and the equity-based financing is really grabbing a foothold.
Yeah.
Speaking of the future, I mean, I know it is anyone's guess, but if you had to guess 5 to 10 years into the future, where do you see crowdfunding going specifically in real estate? What do you see in the near term?
Well, it's interesting because I think of crowdfunding as build your own REIT. I really think that you have this like personal REIT, you can put whatever you want in it. It creates more responsibility and accountability for people, though. I mean, you have to have the time to do the due diligence that platforms make available to you. But I think it's worth it. I think it is similar in some ways to trading stock, and not trading stock, rather buying it. So doing your research on the company and making sure that you want to participate in its growth, not trading, but actually like participating in a company's growth. I think in the future what's going to happen, even once retail investors are in, you're going to have a large number, the largest portion of retail investors. It'll probably end up going into fund structures where professional managers will manage their money because it's time intensive and there's a lot of specialized knowledge there. And then you're going to have a segment of people, much like people who trade their own, buy and trade their own stocks privately now, that will do that. So it'll live in tandem. So I think that there will be opportunities for everybody to participate in crowdfunding. It'll just be depending on how much time they want to spend doing it themselves versus going in and doing, even EFTs. I'm sure there's going to be exchange traded funds off of what we do. Off of the different categories, even of peer lending. So it'll probably take a similar shape to what's going on now, but the real opportunity is just moving these massive amounts of capital that aren't performing well where they currently are into investment opportunities that are in real estate. It's one of the top investment opportunities that I think deserves to receive funding and that can really truly help people build wealth.
Absolutely, and I know we have about 8 minutes left, and I wanted to give you an opportunity to explain what the PDF document, the top 10 questions on crowdfunding. I'm actually showing that on the live Google Hangout right now, so anyone wants to through Google Plus can simply click on the link and they can download that particular presentation. But just tell us a little bit about what that presentation is, so that the audience can know what they're downloading.
Sure. So we just created a top 10 crowdfunding questions just as a very simple, very basic tool for people who might have, like I said, we kind of answer the same questions all the time, but it's in a easy format. You can print it, you can save it to your iPad or whatever device you're using, and it's just basically like an FAQ on basic questions that we get asked a lot. By no means exhaustive. We have a very large FAQ section on the website, so if you want specifics about patch of land and what we do, and even down to the nitty-gritty of our legal structure, it's on our FAQ. But the crowdfunding document is just more of an educational piece for people, and I would also encourage you to share it. You don't have to share it with like links or anything. I'm happy if you're like making copies for people. I think it's really great to educate people about the opportunity and just really take advantage of it. And if anybody has more questions and feedback, shoot me an email. I'm AdaPia@patchofland.com. I'm pretty easy to find because of my name, so even if you Google it, I come up pretty quickly. You'll find me on all the social media channels, so if anybody wants to follow up or have more questions. We also post questions to our blog when we get asked questions, so that with keeping people's identities safe, of course, but we like to share the information that we're offering to anybody who asks us a question. So you see that on our Q&A section of the blog, so that's also an opportunity to learn more.
Excellent, and actually I just see that we do actually have a few questions that came in.
Okay.
So we have a few minutes, we can answer these.
Sure.
So a gentleman named Sean Stanley, his question is, what is the most common issue you have when getting a deal closed? So what's the most common issue that you see from a developer perspective on getting a deal done?
I think it's just the closing. It's always coming up to those closings. I know our underwriters And we're going to have, maybe the next webinar, we can have our Director of Underwriting on, and he can answer those questions. But I know whenever I see them, they're pulling their hair out because they can't get documents from the developer. So if you are a developer, just making sure that everything's in order and you have the documents to them as quickly as possible. But my understanding from speaking to that, I say that side of the office because they're on the other side of me, is that it's usually the closing. It just kind of comes down to the wire.
Absolutely, yeah. I mean, especially when you have, whether it's an REO property or whatever the case may be, there's always those deadlines. So you're right. It had, getting everything together so that you get it in time. Another question too. Another gentleman, Scott McIntyre, he actually wanted to get more clarity on the tracking part to intrastate crowdfunding.
Mm-hmm.
So I guess, can you explain that again? So they're able to track where the funding is coming from simply by where the
IP address.
Okay.
Yeah, IP address. So basically, and if you go to a blog, it's Crowdfund ATTNY, Crowdfund attorney Mark Roderick. Yeah, he's a lawyer. Mark. He's fantastic. He's always blogging about these kinds of things, and that's actually where I got. He's my source. And so Crowdfund ATTNY. Crowdfund attorney, and basically they're tracking by IP address so that they know where the IP of that computer is registered, and that's how the SEC is determined they're going to track people investing for intrastate.
Excellent. And so then the last question we have time for is again from Sean Staley. Are all investors in the U.S. or are these foreign entities, or are there foreign entities lending as well?
We mostly U.S. We do have some foreign entities that we're working with. It's such a difference, right? Because if you're American, it takes like 5 minutes to invest. So you do it all on the platform. We have not built out the technology yet to make it that quick for investors abroad, but we do work with investors abroad. Some of our investors also have U.S. addresses, and that really helps. So if you have that opportunity, that makes it easier, but we definitely work with international investors, but the bulk of our investors are American.
Great, and well, excellent. AdaPia, thank you so much for explaining the world of real estate crowdfunding, specifically with Patch of Land. As you mentioned, this will be a monthly show, and the opportunity to bring other individuals from Patch of Land will be available as well to get into the underwriting details. But any last words before we sign off?
Yeah, I would just say, let us know what else you want us to talk about. I mean, we could do this, again and again on the same topics, but, if we have specifics, like I said, we can get our head of underwriting on, and we can have, we love feedback, and we love to be able to provide specific information that people are looking for, and we can prep for that. So I would just say, let us know what else you would like to know, and we're really an open book. So feel free to contact us at kind of any time, anywhere, and we'll do our best to be really fast at answering.
Great, AdaPia. Pleasure as always. And everyone, thank you very much, audience, for joining us today. This has been Real Estate Crowdfunding 101 with Patch of Land from patchofland.com. And everyone, have a wonderful day. Thank you.
Thank you.